A very good morning from Khandwala Securities Limited and welcome to Tuesday's trading action at Dalal Street dated May 31st, 2022.
Overnight, Wall Street was closed for Memorial Day, but US stock futures rose in holiday trade as Shanghai sets reopening plans. European stocks extended winning streak for fourth session. Please note, in the week gone by, the three main US indices gained over 6%, with the Dow and the S&P 500 booking their best week since November 2nd. In yesterday's trade too, Nifty again witnessed a smart, constructive and structural advancement, while the last 3 days rally has been backed by bargain hunting, short covering and value buying. Honestly speaking, the last 3 days bull run is worth celebrating, and the good news for the bulls camp is that the ongoing rebound has a decent chance of lasting. That brings us to our call of the day, which says FOMO shall rule traders' mindset in near-term trade as well, and helping sentiments will be the following 7 big positive catalysts. First, Nifty is building bullish double bottom pattern. Second, expectation that the Federal Reserve won't become any more aggressive on its plan to lift interest rates. Third, early arrival of monsoon. Fourth, fresh stimulus in China. Fifth, easing China COVID curbs. Sixth, the US dollar index has dropped from a multi-decade high, has slipped from 105.06 to 101.65. Seventh, hopes that FIIs will finally buy. Well, if this fairy tale is believed to be true, then Nifty could reclaim its psychological 17,000 mark with an inter-month perspective. Technically speaking, bears may turn bulls if Nifty closes above its biggest hurdles at 16,837 mark. We suspect Auto Index and Bank Nifty are likely to be star performer, followed by IT Index. Now, before we get into details, here is the preferred trade on Nifty and Bank Nifty. Nifty closing price 16,661, buy at current market price, strict stop at 16,313, target 16,837 and then at 17,000, aggressive targets at 17,265 zone. Bank Nifty closing price 35,827, buy at current market price, strict stop at 34,721, targets 36,103 and then 36,561, aggressive targets at 38,759. Outlook for Tuesday. All eyes on India's GDP for the March quarter to trickle in today. The risk of recession is front and center in financial markets. The street suspects that the Fed will move so aggressively as to cause a recession. The only biggest headwind for our stock markets is inflation. Investors will spy with one big eye on how much the central bank will tighten monetary policy and raise interest rates to tackle inflation in the year ahead. Well, the inflation genie needs to be put back into the bottle for the bulls to survive and prosper. So, the biggest villain which can bring back concerns about inflation, economy and earnings is WTI crude oil, which has gained firm above $116 a barrel. So, the Gyan mantra is to trade selectively and be nimble. Our chart of the day is bullish on Grasim, ABRFL and Tata Motors with an interweek perspective. The Nifty options data for June series suggests Nifty is likely to be in a trading range of 16,000 to 17,000 zone. Maximum call open interest at 17,000 followed by 17,500 strike price. So the 17,000 mark will be Nifty's crucial resistance zone. Maximum put open interest stand at 16,000 levels followed by 15,500 levels. Call writing was seen at 17,100 and then at 17,300 strike price, while there was meaningful put writing at 16,300 and then at 16,200 strike price.
That's all we have for now. For any queries, do contact us at 02240767373 and do visit our website www.kslindia.com. Thank you and have a profitable day. Please note that the stocks mentioned in this podcast are only for educational purpose. Khandwala Securities Limited or any of its employees shall not be held responsible for any investment or trading action undertaken by any person based on the stocks mentioned in this podcast.